Welcome back to the watch list. I'm Nicole Petallides. It's Monday. We've already had some back and forth action. The Dow's down about 40. Our next guest, Patrick Mueller, joining us, RFC and president at Bella Advisors. Thank you so much for being with us. You talk about the tariff tornado that has hit the markets, but have we become a little calmer now? You know, there was a time that I remember, Patrick, where we had a lot of terrorism headlines, and the first ones really crushed the market, but then they kept coming one after another. We almost become desensitized to important information, but the market takes it more in stride. Is that where we are now?
It definitely is, and it's great to be with you, Nicole. That we're getting numb, I think, to all the volatility that we've been seeing all year long, and everything has been so headline-driven this year that anything that somebody says, it drives the markets up. Somebody says this, the markets are way down, and it's a little nutty. And so people just need to be a little bit patient, I think, because the markets just don't like uncertainty. And we just have to be patient throughout the course of the year and just know that we're going to be in for a rocky ride this year. And I think most investors just need to stay patient.
And I know you have certain names and things that you're watching, maybe for a good diversified portfolio. But before I get to your recommendations, I wanted to talk about your concern that you have about credit card debt, about how people are behaving, and then what I guess could be the bigger picture here.
It's massive, and I don't think this is getting talked about enough right now, is that you have credit card debt at all-time highs, and you have DoorDash that is starting to basically take credit where you can pay for your fast food and for easy payments. And there was seriously $80 billion last year. I'm sorry, it was $80 million last year, where people are buy now, pay later on. You see it all the time on shopping on Amazon and things of that nature. And all this debt is just piling up, and it's reaching a boiling point. And at a certain point, that bubble is going to pop. And it just shows you just how people have been living the last few years, just far beyond their means, and with inflation and how big of a factor inflation has been, because inflation has seriously doubled over the last few years. So, people could be overspending, or people are just trying to keep their head above water. And so people need to start paying attention to that.
Yeah, your concerns about the credit card debt that you noted, you said hitting records and depleting savings. During COVID, it was a different time, right? You had fiscal stimulus where people were getting money into their household accounts, and we've used those as well. So let's talk about what you think could work in a diversified portfolio. You definitely have gold and silver in there. Are you like them both?
I like both of them, especially in fear-driven times like we're in right now, times of uncertainty where there's going to be a lot of chaos. People tend to put their money into gold, and then the sleeper, I think, is silver that people should start paying attention to. Just because there's not just the fear of that, but for the demand that we need for electric cars, solar panels, things like that. And then also the mining companies as well, something to start paying attention to when it comes to the precious metals that we're starting to see do very well. But as things are volatile, as things are fearful, you're going to start seeing people look for alternatives, and also the weakening of the dollar here recently. You see more money going into Bitcoin, and you see more money going into gold and reaching all-time highs, and the same thing for silver. So I think we can see that for the foreseeable future, but people definitely need to be thinking more than just gold and silver to be putting their money into.
3 areas that you're following: financials, healthcare, utilities. Would you put those into the portfolio now? Are all 3 probably a good place to park some money, or not necessarily?
Absolutely. Healthcare was a sleeper last year, and I think that we can start seeing a return of that this year. So companies like Johnson & Johnson are going to do very well. For financials, with deregulation and regulations coming down, then I see financials doing a lot better. We'll probably start seeing a lot more IPOs. So financials like Visa, you see weathering the storm pretty well. And then you've got utilities that tend to be fairly stable for the most part. And so I like utilities, especially when it comes to the utilities for the demand on AI, the data centers. Like, we get our internet from a data storage facility next door to us, and it's massive here in Atlanta. You've got all these data storage places popping up all over the place, and the demand is twice as much as there is supply. So we can see that long-term being a good play.
Look, AI and tech have helped to lead the market. People love AI and tech. At this point, many of these names are 20% or more off their 52-week highs. Do you have certain names or groups within AI and tech that you do like?
Well, a lot of your main players, so a lot of your Magnificent Seven, I think it's the long term, it's going to be a good play. They're getting really beat up right now, so people are going to have to hold on and be patient. But we see the biggest earnings coming from tech moving forward. And people aren't really feeling that right now, but long term, we're going to see that take a swing and start moving back in the right direction. So even though NVIDIA has been getting beat up, for AI, they're going to be a front runner when it comes to that, and Microsoft. And so I think people just need to, a lot of your bigger companies, unless you're really trying to take a gamble, a lot of AI companies in the last few months have really been taking a beating, and it's not the time that I would be getting into it. So, but long term, we see the best growth coming in through tech.
We saw NVIDIA, I just was checking a moment ago, it had been at 106. We've heard from Alphabet, Google, which had some good numbers. And this week we'll get Microsoft, Meta, Apple, and Amazon. Are any of those names super interesting to you? I mean, like, is NVIDIA at 106 interesting? Is NVIDIA below 100 interesting?
I think all of them right now are very interesting, and people should be buying in the dips. As things are getting beat up right now, long term, I think it's a great time to buy, and just try to start buying these dips throughout the course of the year and be dollar cost averaging these different shares over time, I think is important. And that people need to have some stability. And if you look at Warren Buffett, he's sitting on over $300 billion in cash. And this guy doesn't get it wrong very often. So this guy's ready. He's always ready to pounce, right, when these things happen. So when you can start seeing this guy make his moves, might be when we start seeing the upswing in the market. But I don't think things have gotten beat up enough. But owning like Berkshire Hathaway, Berk B shares, I think has been doing very well this year. So we've been owning Berk since the beginning of the year. And just think about big, boring companies. You can close your eyes, and 5 years from now, they're going to be doing well. So people need to have a lot of that in their portfolio as well.
All right, time to go. But if you're 40 years old, what percent would you have in bonds right now in a portfolio, roughly?
Great question. So take your age. So just a general rule of thumb, if somebody is 40 years old, then 40% of your money should be safe and protected from market losses. So we want to look at bonds, and I always recommend own your bonds directly. You don't want to own them in a fund. Okay, because for different reasons, it doesn't have a maturity date. But for 40%, and that 60% is okay to take risk with. So the reverse, if somebody's 60 years old and getting ready to retire, 60 should be safe and protected, 40% of risk.
Patrick, thank you. Good to see you. Patrick Mueller. That's a good sort of thumbnail.